Welcome to TradersPost office hours for April 15th, 2025. I'm Tom Hartman, marketing manager here at TradersPost, alongside Mike Christensen, co-founder and CSO, and John Wage, founder and CEO. We're going to get started with office hours right after this. We're always working to make TradersPost better day in and day out. Each week, we take a deep dive into all things TradersPost, answering your questions, gathering your feedback, and helping you get the most out of the best automated trading platform in the multiverse. Yes, we've upgraded to multiverse, folks. We've also combed the social posts for information about trading and your questions about trading. And so we'll dive into that at the end of today's show. So let's get to it. How's it going, gents? Oh, nope, I've muted you.
That's okay. I was sure I was unmuted. No, doing well. It's been an interesting week. Obviously, volatility starting to pull back. Questions are rolling in. We've got a lot of new people that are using TradersPost and a lot of new questions coming in. So excited to see things continue to unfold as we head into hopefully summer break soon enough.
Well,
I didn't really
it all
look at
seems
the market much. It seems I didn't see that volume has gone down a lot the last 3 days.
Yep. Things are kind of calming down a little bit, if you will.
well. One of the things I was excited about for TradersPost when I first heard about it a while ago was this idea that it seemed inevitable. Automated trading to me seems inevitable. In fact, the more I look into it, and the more that these tools get developed, especially the AI component, the more it seems like, well, it's like using. I'm going to put on my web designer hat. When I used to code HTML by hand with Notepad++ versus using frameworks like Bootstrap or Foundation in order to get things going. It's what people go, oh no, I still code websites. No, you're not coding things like you used to before. You're using all these different tools and you're daisy chaining things together. And so to me, automated trading, I think will feel like regular manual trading, just with all these different automated features in the not so distant future. So I feel like I'm on the way forward for that.
Hopefully we've gotten ahead of the movement well before the mad dash of users is coming in, so we have time to prepare our infrastructure for a huge influx of customers. We're already growing in that way, where it seems like growth is starting to put a little strain on our hardware. John, I think you were just telling me this morning we're already upgrading some of our database infrastructure and starting to add to our infrastructure. We're going to be making a move over to Google Cloud soon. So we're doing a lot to obviously support all of this, but it's exciting.
Yeah, actually, to that point, it's always been fun here. Like the question has always been floating around, at least in my mind and in some of the support forums, of like, hey, what information do we have access to that we get as members here at TradersPost that you wouldn't just normally get in other circumstances? And one of those things that actually can be a surprise to many people who have never heard the term prop firms is this idea that prop firms are like becoming a big hot thing within the trading space. Here you can see stats here that we are. I'm here in John's clickety clack. I'm just going to mute you there, John. That Top Step, Apex Trader Funding, and My Funded Futures are really the top prop firms currently that are using the TradersPost platform, which is interesting in two veins. One, if you've never heard of prop trading before, prop firm trading before, just think of it as basically trading with somebody else's money. The risk is sort of like offloaded and you just being able to be a good trader. And because of this, there's tons of people who want to be on the prop firm platform, on an automated platform like ours, not just for two reasons. One, to be able to execute across multiple accounts, prop firm accounts, which to me, Mike, when you told me about this, was just like crazy that people would have 5, 6, 7, 10, 20 accounts to maximize their exposure to markets. And then the other side is that they have to failing there's a big penalty to failing. It's not like when you're trading just your own personal account where you could fail, okay, just lost a couple of dollars and start again. Here they actually have to pass through evaluations in order to move forward, to keep their accounts open. I just want to get your opinion here then on like the prop firm space. Is it something that you think is basically a symbiotic tool here with TradersPost, and that we're going to see it grow from now on?
Yeah, no question. I think the activity definitely indicates to us that people want this type of solution so that they can manage their trades across multiple accounts at the same time. The growth of the industry obviously is supporting the need for prop firm companies out there that have, you know, a diverse set of instruments to trade and a diverse set of rules for people to kind of trade in their own style, in their own way. I'm actually going to be interviewing a prop firm trader on Thursday for our Trading Bot Sessions show to get a sense of how he overcame a lot of these limitations himself. But he's pretty wild. He's actually managing multiple prop firm accounts across different prop firms and trading them all on a discretionary manual basis simultaneously. So somehow he's got the brain to manage all of that all at the same time. For us, we're like, look, for the rest of us that can't do that, let's use TradersPost and we'll make it a lot easier for ourselves. So we're definitely going to have an interesting conversation on Thursday. That said, I think the growth of the industry is really fascinating. The number of prop firms that are out there are really interesting, and we're in conversations with right now with a lot of them to onboard them as supported vendors. If they use Tradeovate, then most likely you can already use them through TradersPost. That's where a lot of this growth is coming from, because Tradeovate tends to be one of the bigger prop firm providers. However, if it's a prop firm that has kind of their own backend technology, that's something we have to investigate directly and see if we can work with them one by one. So if you guys have suggestions for prop firms you really enjoy working with, I know there's a lot in the Forex space, and we'll definitely explore that as we get into Forex sometime this year. But if there's any futures prop firm brokers that we don't currently support, or you're curious if we support, leave a comment and let us know what we can explore there.
Along the same lines of surfacing information as being part of the elite community for TradersPost, there is this cool idea here of the number of trades that get activated on our platform. So in aggregate, we saw an increase between yesterday and today of 30% in the amount of trading volume that's happening, which, who knows? Maybe one day that's an indicator, one day that's a service or something like that. But does that portend a bottom in the market, that we get sort of like no downward movements but an increase in volume? That might be interesting. As we saw back in I think end of March, there was this gap up also in the amount of the change of the volume between the previous day and the current day, and that resulted in a couple of points up in the market. So I know I've been sometimes I bug Mike about this, especially at the beginning. Like, hey, what stats are there available for in aggregate from users? And that might be interesting for us to see in the future.
Yeah, it's definitely interesting to see how changes in volume sort of line up with support and resistance areas on the chart. What I found surprising is that the day before that big uptick day, the volume wasn't all that big, and then on the big uptick day, a lot of volume started to take off, which
That's right.
wasn't that surprising. But then you can see there on Monday, once everybody had the weekend to process what had just happened and start to develop some strategies to push live, volume went up another 30% again on Monday morning, April 14th. So we'll see how today and the rest of the week shakes out, but we'll just keep presenting these changes to give you guys a sense of where our traders are showing up. Really interesting to see it align with different places on the chart, as we're just looking at the S&P or the NASDAQ 100.
I would say right off the bat, don't bother asking us if people are successful in their trading or not. We just know if they're sending signals in, whether they're profitable or not. That's up to them.
Yeah,
Um,
that was just a reflection of the overall volume of requests. We don't peek into people's trading strategies, so we don't really know what's working and what's not. But Tom, were you able to get a chance to pull up the list of tickers that people are trading? That is one thing we can share here. There we go.
yeah, absolutely.
So I found this pretty interesting. Just over the last couple of weeks, looking at the major things that people are trading, seems pretty obvious. Most of them, names that I think we would all typically expect to see here. Obviously, Bitcoin and Ethereum take the cake for overall crypto volume. Solana, XRP is pretty popular right now. I found Plug interesting. I'm not sure if that's a new crypto. I think that would have been traded through Alpaca. But that was one that I didn't expect on the top 10. And then, of course, MNQ, NQ, those are pretty popular futures contracts to trade. Gold is in there, micro gold's in there, the Dow. and then a little bit of Bitcoin as well in futures. On the options and equities side, I found TSLL pretty interesting. I know if I had looked that one up, that's a 2x bull ETF. That's basically a leveraged ETF for the S&P 500, which says a lot about people's positioning right now on which direction they're really looking at the market under. And then I guess SOXL is another 3x semiconductor bull ETF. So definitely interesting to see a little bit of a bullish sentiment there in the ticker list.
Awesome. Oh, so fascinated. The wisdom of crowds. This is why I love markets. You look at the chart and it's just like millions of different interactions happening together, and you get a view. Very much like astrology and how the different stars and the planets can help us. All right. Actually, that astrology bot video that we did got like one of the most amount of reviews on Twitter. I was actually quite fascinated by that.
I love the first comment that came back like, LOL, are you serious? Yes, we are. We are now trading off of astrology. No, we're not.
If I saw that go through a stream, I'd have to click on that. Okay, let's just take a look. Especially after like I lose 3 trades in a row, then I'm like, okay, let's just take a look at the astrology one.
Yeah, maybe the moon's got a better opinion about where markets are going.
All right, so let's jump into the questions for this week. Once again, these questions come from us, from support, from Twitter, from YouTube. So if you have any questions in the future, please do let us know. But we start off with one here where someone asks, can TradersPost support a multi-timeframe chart overlay directly in the strategy editor on TradersPost in the app? It would help a lot when trying to correlate signals across different timeframes without leaving the platform. We've actually talked about this a few times. This idea that hey, what if like the TradingView chart existed inside of the inside of the backend of TradersPost, where the trades, the signals actually show up on the charts over there. Maybe there's some additional information. So I figured maybe we'll just take a peek behind the curtain here just to see, hey, what's the feasibility of that? Are we still kicking that around? Is that something that might show up in the future?
It's definitely something that's possible. There's obviously a lot of vendors out there or technology providers that integrate the TradingView charting library into their systems. I've integrated it once before on another project. It's fairly easy to do. It's easy to work with. The tougher part is that the backend infrastructure requires that we have live pricing feeds for all the different asset classes that people trade. And that's actually the bigger hurdle, is getting the WebSocket feeds of all of the pricing, all of the assets priced, all the options pricing. Like, there's just so much data that we'd have to consume and ingest and make sure are made available on the charts, that it's kind of a cost prohibitive project. So I think as we grow and we consider how we can ingest a lot of that pricing data at scale and serve all of our customers at the same time, then that would be a better time to reconsider that project.
I've also found it fascinating the line that that you guys have to walk over here, where you want to be a bridge to the brokers, to the crypto exchanges, and the more of the pie you take as to service certain features that people want, the more it becomes like the place to go. And so then there's like this discrepancy, like, hey, do we want to pass through, or do we want to be the place where people are spending a bunch of their time? So interesting to see how the community directs the growth.
If I understood that question a little differently, though, if you can bring it back up, it seemed to me that their question had more to do with how to actually send over alerts from a multi-chart environment.
I think what he's asking is about combining multiple signals, where like you can say like, don't take the trade until I've received all 3 of these signals.
Right.
Which we've
correlating signals across different timeframes without leaving the platform. And we've gotten that before. So this is just another version of the gate idea that we had talked about, where sending one type of trade idea through unlocks the gate for the next type of trading rule for the next. And like, you can sequence together these bits of logic that tell you when a trade should be taken or when it shouldn't. I think we're still trying to unpack exactly how that might work and get it into the feature roadmap, but it's definitely something we'll continue to prioritize. Obviously, this comes up maybe every couple of weeks. So,
yeah, the reason I'm so fascinated about that sort of idea is that, like, did you guys hear about the new A to A, agent to agent protocol that I think Google wants to launch, that allows, like, a new protocol for the internet that allows agents to talk to other AI enabled systems in a way that's highly predictable, deterministic, and that you can actually build enterprise level solutions on reliably. I imagine so much new information, so many signals that people are going to want to generate in the future will come through AI analysis, right? They won't be code in PineScript or creating, like, it'll come through these different things. Imagine the Zapier model that Mike, you keep talking about, where you get to connect things, daisy chain things together in order to get great trade ideas. And so that components module, yes, but also the idea that TradersPost can directly integrate with something else from the outside and also receive those signals in there. That seems like, to me, like down the road, I would love to see that in TradersPost, where it becomes more like a tool you can plug and play within these no code, low code solutions.
Got it. Yeah. I think that's something we're probably more eager to support sooner than a whole TradingView charting library. That I think internally we called that the webhook relays, where basically when you send a webhook through to us, you can divert or repackage that message and send it out somewhere else. So it could go to like Slack or Discord or Telegram or something like that. And in that vein, I think we can definitely support that very easily. But it's something we've still got to give some thought.
Cool.
Tom, before we move on to the next question, we did have a comment here on this question right here. I'm analyzing some of my trades and the total execution time is usually around 4 seconds. The longest time comes from the trade auto approval stage. Is there any way to increase the speed of that? I think we had a support ticket show up today on that same question. Some trades have taken up to 7 seconds as well. John, I know we talked a little bit about this morning. Did you want to comment on that?
Yeah, there's a variety of reasons that can all contribute to how long it takes to auto approve. So when we receive a trade, we have to make a bunch of API calls to the broker. And it takes, like, we have to fetch your balances. We have to fetch a quote for the ticker. We have to fetch your open positions and your open orders. If the broker is responding slowly at that time, it can cause delay with the trade execution. But then also, if our systems are busy at the time that trade executes, it can also cause that to be delayed. We're working on some improvements, some upgrades to our infrastructure to try to improve that speed. And then finally, what we see these delays most of the time with people who are trading on really, really low time frames. Sometimes people will send a signal like back to back or in the same second, and those signals can actually block each other. So we'll have to see more details about your specific trades. If you can email them to support, and then we can take a look at them.
Yep, I put that in the comments here. So. Spaghetti, if you don't mind reaching out to us, we'll see if we can dig in a little bit further after we look up your account.
Feature request. I love the alert system, but sometimes I get too many notifications during active sessions. Would it be possible to add an option to configure a minimum interval between alerts or otherwise customize alert frequency?
I think you would do that on the TradingView side, right? I mean, if the strategy is sending too many alerts, you're probably on too low of a time frame.
I suppose they're referring to maybe multiple strategies coming in at the same time, but we don't have like a live alert system on TradersPost anyway. You click the notifications tab and it's basically going to show you everything that came through. I don't see how an interval would change the presentation of that page at all. So yeah, I'm a little confused by that question. Were you able to glean more out of that, Tom?
No, I was thinking it was like email notifications or push notifications that come through. Is it one for each one of the messages? And I thought they would want to bundle that together like once every 10
Can you bring
minutes
up the question again? I want to read it again. Yeah, I don't really understand what he's asking.
All right, no worries. All right, next up. When I run into an order execution issue, I'm left with a very generic error message. Could TraderSpost offer more detailed API error logs so I can diagnose and troubleshoot problems more effectively? So I didn't have a specific error message from this user, what they were talking about. But I just wanted to bring up here that there are error messages that we get that's from the broker.
Right.
and they could have a wide array of message that you're seeing, and we have no real way of customizing that message at all, because they could always create new ones, change them in the back end. We can reliably map those.
Yeah, we basically just show the exact response that the broker gave us. So sometimes there are brokers that don't give very good responses. Some brokers give really great detailed messages. But if you ever get a generic error from a broker, you can reach out to us to see if we can see something that could be improved. But generally, you have to reach out to the broker, give them the order ID, and they can look into it to see what happened.
That's right. All right. Is it possible to integrate third-party risk management tools with TradersPost? I'm looking for details on available API endpoints or webhook configurations so that I can connect my risk system to the platform.
I want to know which user this was, because I am working on some risk management product features within the TradersPost ecosystem, and I'm curious what third-party tools they might use. But I'm also curious how they expect that to work. I've looked at other vendors like Ernie Chan, who's a fairly well-known quant in the space, has a platform that he built called PredictNow.ai. And Predict Now allows you to send an API call about your trading features at this very moment, and it runs it against a sequence of all kinds of analysis, and it comes back with basically a prediction score and a bunch of other risk management guidelines and some other things as well. And basically, they're taking everything they've learned about building automated systems over 20 years of doing this and packing it into this system. So there are vendors like that, but it's important to note that there's a trade-off as well. If we have to send out another API call in the middle of your order to determine risk parameters, it's going to slow down the execution time for that trade as well. So we would need to look at the vendors that you're considering, the vendors you'd like to work with that manage risk, how quick their response time is, and how quickly we could turn around a response before we send the order off to the broker. So an easier solution might be that we continue to evolve our risk management features internally. I have a few different ways I'm looking at this. One is basically sort of a rolling risk management feature where it looks at your recent wins and losses and it reduces or increases your position size accordingly. And there's a number of other mathematical approaches to determining position size as well, but almost all of them rely on some existing trade data before it starts to make better assumptions about where position size should be. So there's a method called optimal F. We can also do it just based on mathematical expectancies. So there's some ways I want to explore that, and perhaps that's good enough for what you need. But if we do it within the TradersPost system, then it would be a lot faster than trying to rely on a third party to manage risk. That said, I'm all ears and very open-minded about other solutions that might exist. So Tom, maybe you can track that one down and ping me with more detail on what they were looking for.
Absolutely, be happy to.
So I want to go back to the O Spaghetti one. If he was the one who reached out to support, the frequency of signals, like the time in between your entries and exits, is the cause of the problem. Like if you look at your logs, a lot of the times you'll see an entry and an exit happening in the exact same second. I saw scenarios where you would flatten a position, and then before the position was even flattened, you were sending another signal to re-enter the position. So I'm guessing you're trying to run some kind of scalping strategy that's on like I'm not sure what time frame, probably less than a minute. But in that particular case, I did look at that issue from our support rep that sent that to me. I think it was just the volume of signals that you're sending. Like it has to be at least a minute in between entry and exit. There's just no way to overcome like the physics of how long it takes for a signal to be sent from TradingView to TradersPost, and then TradersPost talks to the broker sends it to the exchange. And then if you send another signal before that has time to execute, it actually can block the other signal from executing. So just generally, TradersPost can't support scalping types of strategies where you're trying to get in and out within a second. But if that wasn't I mean, you already sent something to support. I think we already looked into it, but we'll take another look.
Excellent. Yeah, I'm not sure if the prompt would be any different. It would be the same sort of.
I don't think so. Yeah, it just the customer. I don't know. I don't know if the name was O Spaghetti on the account. I don't remember, but I looked at one.
It feels familiar though. Yeah,
it does. Okay.
Yeah.
Yeah. So I looked into two accounts this morning, and that was basically the problem. Like the volume of signals and the time in between entry and exit there was literally no time in between them, and it's just physically impossible to execute a strategy that's trying to get in and out of trades every second. It technically violates our terms of service, like the fair use and acceptable use terms of our platform. But we have rate limits like 60 webhooks per minute and 500 per hour. But still, if you try to send an entry and an exit that are literally back to back with no time in between, you'll definitely run into issues with that.
All right, the big question. Hi, is there an estimate on when you expect an IB to be out of beta? Thanks.
Oh man, IBK. I mean, I don't know if we should just say it out loud. What do you think, Mike? I don't even know if we're ready to do that yet.
I mean, we've been exploring other options, and it doesn't feel like we've gotten very far with what options are really out there. That said, the issue we're up against right now is it's going to require considerably more architecture in order to do our integration with IBKR in an effective way. So taking it out of beta is definitely not on the horizon anytime soon, as we would need to sort of rework how the IBKR integration works if we're to continue down that path. So I would say hang tight. We're still trying to make a bigger decision about what we do with IBKR in the long run.
Yeah, and be happy it's in beta. That's what I would say. Be happy it's in beta. All right. Someone is asking here, feature requests. Please add the strategy stats, high, low, P&L, as recorded in TradersPost to the dashboard would help a lot. Thanks.
You bet. Yep, we want to do this. We don't just want to do it. We've made a lot of headway on this already. Our analytics suite and feature is coming out within some unknown period of time. I'm not going to give a date, but it's something we are actively working on. We're sort of on the last tail end of it. That's fairly complex. We've got a couple problems we're trying to solve around infrastructure, as well as how to get it as real time as possible. But this will include things like your win rate, your profit factor. We'll get a P&L calendar in place, a whole history of your equity curve, and a whole bunch of other bells and whistles that people are typically looking for when it comes to tracking your performance. It will be very shareable, so you can, do a little humble bragging on Twitter, and you'll have the ability to manage it on a per strategy basis and at the account level as well.
Final question that came in this week. If I don't see my broker in the waiting list, should I assume it's not going to show up for a long time?
Not necessarily. I mean, you need to email support and ask for it. That's how it goes on the wait list. So yeah, definitely email us your broker that you use, and we keep track of it. And if there's enough people asking for it, we'll add it to the list of wait lists so that we can collect more inquiries about it, and we stack rank which brokers we integrate based off of that data.
Yep. So your feedback is super valuable there. We probably could make an improvement to the waitlist page to let people request.
I think so. Yeah.
Yeah. So we'll look into that as well.
You can also go full blown with like a user generated content marketing campaign where you try to get you and 10,000 of your friends to petition the broker in order to request access to us integrated with our platform, which is probably the best way of going about it. Just make it happen instead of just clicking on the button on the waitlist. For sure.
That's whatever broker you want to work with, put a bunch of pressure on them to talk to TradersPost, and we'll take it from there.
Act like they're your congressman. You got to integrate it with TradersPost.
It helps, honestly. I mean, making noise, what's the phrase? The squeaky wheel gets the grease or whatever like that. Right. We need people advocating for TradersPost, posting on social media, posting on Reddit, emailing the brokers. Like, we want the brokers to be so annoyed with our customers that finally they're just like, hey, we'll pay you to integrate with us to stop
No, no,
these
no, no,
people
no.
from.
We want them so passionate about solving their customers' problems that they are so eager to work with TradersPost.
That sounds better.
To that end, I do want to remind people that it is super helpful. The reason we do this is that we want to like collaborate with you. You help us become better. We help make better tools and products for you. And you can help a lot by going to reviews.io and put in a review there for Traders Post. We love to see those 5 stars there. We love to see your feedback. And if you've watched this video up until now, chances are you're exactly the kind of person who needs to go over there and post a review. So head over to reviews.io for the Traders Post account and post yours today. Before we wrap up, I would love to do my favorite part of office hours, which is the Reddit corner, where we take a look at a couple of posts for people trying to get into the trading and automated trading game. We start off with r/algo trading, where this user asks, is my idea for algo bot risk management good or can be simplified? So basically, I'm currently working on my first algo trading bot and framework in general that will be able to run multiple strategies across multiple instruments on different exchanges at the same time with variable funds allocation. Sound familiar, John? The idea is that strategies will push trade suggestions with allocation percentages instead of actual amounts of money, and then traders' insistence with queue order requests and determine actual funds and yada, 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 yada. What the person was asking is if there's anything that they need to add. Now, we did answer this user saying that you can go ahead and use TradersPost. You should check us out. A lot of functionality.
We have -10 karma on that post.
That's right.
Man.
So this is what I wanted to address here, right? Because the person says at $41 a month for a single strategy, while I can do as many strategies I want for less, is too much. One, I don't know how you're doing. You're paying something in some way, either in time or whatever services you're using. Later on, this person was saying, I'm not trying to dunk on Vicenti here. I'm just trying to say that, hey, like, we understand what you're talking about. We know what you're trying to build over here. Just keep in mind for what the actual cost is accounted for.
Also,
they say at the bottom,
it's a little bit of a misunderstanding here. $41 a month, or $49 a month rather, for our starter plan gets you access to a single strategy where you can send multiple types of signals across multiple asset classes. We really need to work on the language on that page because it makes people feel like they can only work on one asset, one strategy at a time, when in reality you can be managing a whole bunch of different positions simultaneously within the same strategy. So we will improve the messaging there. And the entire system obviously supports all kinds of approaches like this. But to the risk management question, I think there was a lot to unpack there. I didn't get a chance to see the rest of it.
Well, I didn't. The reason I came to this thread is for this Traders Post comment over.
Oh, just the okay, got it. All right, fair enough.
Yeah.
Fair enough. It was an interesting question around risk, but were there other comments under the Traders Post side? Why do we get so much hate? Just because we're shilling? Is that the problem? Are we shilling too much, guys?
I mean, this didn't seem like shilling. What the person is asking to do to build is essentially a lot of what Traders Post is doing. So it makes sense that we come in, hey, by the way, you can save yourself a lot of time and a headache by doing this. Just wanted to mention here the later on to someone else's comment, the original poster was saying that they're using Node.js and TypeScript because they're used to that tool and so on and so forth. And there's costs for hosting that that code on a server to make sure it's run. All the checks you have to make in order to make sure that it runs smoothly. The connections with the different APIs. To me, I think our cost is like pretty freaking fair. We're not trying to gouge people here, and you guys are always looking for ways of adding more value and doing more things in order to make the monthly costs worthwhile. So I just wanted to, as an ambassador for Traders Post, I just wanted to make it clear, because this video is going on this thread. You can bet dollars to britches. This video is going to be clipped out as an answer for this thread, because there's a lot more that you're getting underneath the hood that is actually worth the cost. That's my 2 cents.
Got it.
So I got banned on Algo trading, my personal Reddit account, because I replied to posts like this and would say, but it was when people were asking about like, hey, I need a platform, and I would, link to Traders Post. But yeah, I think I did it too much and I got banned permanently. So
it's a tricky crowd to appease. Obviously, we have some opinions on these things. Sure, they're biased, but we can still help.
That's right. All right, next up, algo trading advice. So I coded a crypto trading bot. It is mainly takes trades during trending markets and also catches a possible reversals. So the win rate fluctuates between 70 to 80%. I use a zero point 0.5 to 1 risk to reward on a 5 minutes chart. In a day, it could take about 150 trades. So I haven't yet coded that part that would actually place trades on my broker at Binance. So I wanted to ask the people that have a little bit of experience in it, what possible stuff should I add or problems that I would be facing? And the testing is not back tested. It is live testing as a different algorithm picks a few dozen crypto pairs that have trend momentum. Your advice would be appreciated. Thanks. So just two things down here to set the context. One, when you hear stats like this, 70, 80% percentage, risk reward, 5 minute chart, number of trades, do you have any questions to ask somebody like that if they should continue with the strategy? And two, what would be the answer of connecting to Binance? Obviously, TradersPost is the tool you want to be using.
Yeah.
But yeah, let me get your feedback on this, guys.
Yeah, I mean, the first response there is actually spot on with my initial thought. If it's taking 150 trades a day, I would definitely want to know how trade turnover is impacting the overall performance, not just from a market slippage perspective, but also a time slippage perspective, especially if you were to send over alerts from something like TradingView or even your own environment. So that's worth testing out and making sure that that's not impactful to the overall trade itself. Because this, with 150 trades, I'm guessing, is he taking multiple smaller positions for multiple cryptos at the same time, or does he rank order the best crypto pair as a result of whatever the algorithm comes up with? In the past, I've done both. You could basically run a trade on 15 or 20 different of the top ranking potential signals in different pairs at the same time. There might also be a mean reverting relationship between two different pairs. But I also have systems that just choose the best pair and load up on a risk managed position within that single pair. In any event, it all can be done. So I guess the 150 trades a day thing has more to do with how many of that is multiple signals across multiple assets or just a single asset, but you're still turning that over 150 times a day. That's definitely a first question, but
Sure. And the comments are filled with this idea of 150 trades a day. You're paying a bunch in, especially with crypto, where it's a percentage of the amount that you're trading.
yeah.
And if they're not using futures or not using any leverage, it'd be pretty interesting. Either they'd have to have like a large position that they or a large account size they're dealing with to make it worthwhile. At least that's what I've seen with clients I've dealt with the past.
Yeah,
Um,
and in all likelihood, I would want to compare this performance against a buy and hold performance as well, because in all likelihood, you're just giving your performance away to commissions. You may have a successful strategy, but if it doesn't beat buy and hold, what was the point in trading 150 times a day?
That's right. Well, I don't know. My wife asked me that. What's the point if you're not being buy and hold? And in my head, I think to myself, well, one day I might. And these are all the stepping stones in order to get there. She goes, Tom, it's been 7 years. I go, okay, well, I'm sorry. Let's just take a few more years. Sorry, are you in a rush? I do want to mention here the idea here, just to touch on it, that the percentage because that's the first thing this person actually mentioned, that the percentage of success for the trades is 70 to 80%.
Mhm.
And I've been so surprised because I used to think it like that. And I have a strategy that I run right now that's about 25% win rate, but between 40 and 100% profitability, uh, depending on because my profit factor is so high,
Right.
because I'm catching trends.
Mhm.
So when I see someone start off with a 80% percentage success rate with a zero point 0.5 to 1 risk reward, I think to myself, they are being fooled by whatever backtesting tool that they're using into thinking that this is like particularly good.
There's not very much wiggle room in that. I mean, with that risk to reward ratio,
You're not catching a trend. So you're
like
banking on scalping mean reversion.
any time delay or slippage would immediately make it not work.
Yeah,
That's right.
with this many trades, I assume this is something closer to a scalping attempt. And I'm not sure if he's looking at the order book as well. But to say that it has trend and momentum is sort of ignoring the fact that you need to stay in that trend for much longer than that. So I would expect a longer holding period if it is indeed a trend following strategy.
That's right. All right. Look at us just providing just wisdom of the ages. This is free, folks. You're getting this for free. It's fantastic. All right, my last one here might be my favorite, my favorite thread. I've been waiting for a thread like this, but this one just perfectly encapsulated everything. So bear with me here. Need help with my strategy. I thought I had it figured out theoretically, only to keep getting wrecked. Does an edge even exist? There should be multiple exclamation points there. I primarily day trade with ESNQ on slower days. I mainly look at the volume profile and delta with bookmap and footprint chart and supply and demand. The past week, I've been trading on a demo account and have an astonishing 90% fail rate. None of that stuff has mattered. Let me just censor live here. I didn't realize how many swear words inside. Price does whatever the hell it wants. There's negative delta building at supply zones. CVD is falling. We're at the top of a range. Who gives AF? Smash right through. Yeah, sure, the market has been crazy, so I sized down with a wider stop, but nothing. I'm always catching fallen knives or reversing tops, and the moment I decide to play breakouts, I still get rolled. Liquidity sweeps always takes me out. The plays that would be profitable happen too fast for me to enter, and when I do enter, the RR is not even worth it. If I limit in and levels of interest, that what even point of reading delta overflow, blah, blah, blah. It's just a gamble at that point. I could just put random limit orders all over the chart and hope to walk out with a one-to-one scalp. This has nothing to do with psychology, as I am on a demo account, have been donating to the market makers for 4 years now, so not a newbie at this point. I have thousands of hours of screen time at this point. My mind is just a jumbled mess. Nothing makes sense anymore. I have wrote multiple trading bot scripts with NinjaTrader and have played around with all kinds of indicators known to man and back-tested those strategies. I honestly would do better martingale in the direction of the trend at this point. Nothing's really an edge, and if it works, the win rate is not high enough or the RR is not worth it. Any pattern strategies to look into, you can just give me the high-level concepts to look into. I just need a direction to go to from here. And here's the clincher. Edit. For context, I usually have a 30-minute volume profile up with a 3-minute chart and a 30-second chart for entries to look for primarily scalps, but also look to play longer trades if they present themselves. I love this.
It's a great post. I think it highlights the journey we've all been through. What you're really highlighting is the randomness of markets and how difficult it is to day trade in general. I think many of us have been here. Many of us have also sort of come to the conclusion that maybe zooming out is a more effective approach, getting on the higher time frames, getting into a trade a little bit longer and just riding the trend a little bit longer. We've discussed that there's really kind of in general only two types of strategies out there anyway: trend following or mean reverting. So find yourself an approach that makes sense to you and stay on a little bit higher of a time frame. Slow down, stop trying to take so many trades. At the end of the day, what you're doing is increasing the likelihood of failure anyway. But to his main point, does an edge even exist? I think that's always been such an interesting philosophical question for me, because we're talking about potentially two different things when we talk about edge. On one hand, they might mean the edge that would come from mathematical expectation, wherein your win rate and your profit factor are large enough to actually make money over time. So yes, an edge can exist there as long as you have a robust system that has a strong signal and you've done the math to ensure that you're managing risk the same way with every trade. Over time, that should build. But as we know, strategies come and go. Some of them will work for a long time and then they start to fall apart. So diversifying strategies across multiple accounts and running diversified assets tends to help with that quite a bit. I follow plenty of people on Twitter that are systematic traders that echo that sentiment, where it was diversification that really helped them manage that risk a little bit better, but also see better results over the long run. If you're talking about edge from an alpha perspective, I think that's one of the bigger misconceptions. People think that just because you day trade, there's this automatic correlation to potentially beating the markets. Like if I just put my money in the S&P 500, can I beat that performance just based on day trading alone? after taxes, after commissions, after slippage, and after dealing with risk management, and maybe even potentially having huge drawdowns because of bad zones of negative performance, it's unlikely over the long run. It's really, really difficult to actually beat the market once you've accounted for all of those things. I'm not entirely convinced alpha against the market is possible. So what most people are actually doing is they're beating the market, but with leverage. So in other words, it's not alpha, it's just levered beta that you're experiencing. And so that's why so many people trade options or they'll trade futures, but ultimately you're still extracting the beta of the market and you're adding leverage to it. That's my opinion. I don't know a lot of people out there that can do this with any level of consistency, that don't run into the same frustration that this guy's running into without starting to, build out a list of strategies that look at the market from different perspectives, try to get on a little bit higher of a time frame. A lot of the strategies I look at are on the 1 hour or 4 hour chart. I want to be in positions for a little bit longer so I can really capture the wave that's happening from the market and get rid of all that noise that's happening on a daily basis. Especially like April 9th, like this recent volatility event was crazy. If you're trying to day trade that, like good luck. The candles are moving way too fast. So that's my high level take. Hopefully that wasn't a rant.
No, not at all. Just to start with the end first over here, yes, there's all kinds of different ways you can play the market where you're actually coming out ahead, right? That's the game here. And if it's not like the to me, it's way more like poker than it is like blackjack. It's not this random thing. I've actually tried that random thing. Just take random trades, random whatever, and see if that works. And you might as well just buy a lottery ticket. So that doesn't work. What I find is, I don't know if that's the case with this user, but what I find sometimes for people is that they don't necessarily know how to use the different types of assets. So if you're trading options, well, that gives you very different types of risk profile, different types of strategies you can run than on futures or on the underlying. But I've met most of the people I've met in the trading space have no interest in looking at options, where it might be exactly the type of asset that appeals to you. So, for example, for me, when I went to trade options, I was like, oh, my downside is already capped right at the premium that I put at the beginning. Then I just have to focus on being able to find the right entries for the right types of trades that I need to go into. Then it completely changed the game for me because I never had to sit there and hope that my position recovered because I already knew what my downside was at the beginning. Or in for like Mike was just saying, once I started not trying to beat the market, like just only get the ups and avoid all the drawdowns, but instead lever myself against the markets over a longer time period, well, then that also became a successful strategy for me because, again, I'm just focused on my entries. I'm going with the market. I've identified the trend, and I could add in my risk with some stop losses as I go along the way. And these things were useful. But then there's all kinds of other things that people do that are useful ways of making money inside of the market. One I don't particularly do myself, which is selling volatility. So that you could collect premiums on options, and I know quite a few people who do that for success. They make their income that way. Mm-hmm. So there are different ways of going about it. But the fact that this person stated that they were doing it, that they're scalping, that after 4 years they are scalping on a 3-minute for 3 minutes on a 30-second chart. I go, I don't know that you end up there after 4 years of trading.
It's extremely noisy to be on charts that tiny. Even using something like Bookmap, where you're watching the book, there's so many other participants looking at exactly the same thing, trying to scalp out these tiny little zones of price action. I just think it's incredibly noisy. It's never really been effective for me. The longer time frames have always yielded better results for me, where I'm in trades for longer periods of time.
That's right. John, what would you say to this? Would you say, well, obviously
the first thought I had was that he's switching strategies a lot, and like as soon as it doesn't work one time, he's moving to the next thing. And then you're kind of like playing whack-a-mole, where it's like you switch from one strategy to another one, and then as soon as you switch, the other one starts working. And I'm not saying like if you would have stuck with one strategy, it would have worked, but generally though, I feel like when you're trying to chase different strategies and like just switching your plan daily or weekly, It's really not enough time to let it work. But probably the low time frame is the real culprit.
Right. And I didn't hear it mentioned over here or in the thread afterwards, but trade journaling. I mean, once I actually start challenging what are the assumptions I am making when I'm entering into a trade, because often you get fooled by your runs that work, and then you don't realize, well, you ate out all the profits on that on the 10 times that you attempted it, or that you were just going in and out of the market, and you just erase that from your memory. Oh, I had 5 great trades. Yeah, but you had 20 like terrible ones that ate all your profit. And so if you trade journal, it's therapy for yourself. It's one-on-one therapy, super painful, but super useful.
Yeah, I
It's like
think
in
you have
baseball
to.
when you swing for the fences, it's like
Right.
it's not good, and it ends up hurting you when you do that.
Yeah. I think you also have to be willing to be really honest with yourself. There's a lot of things we do when it comes to trading where we revenge trade, we're chasing after a trend, we're FOMO trading, you're hoping that this next trade wipes out all of your losses, so you take on too much position, you put on too much risk. That you have to ask yourself a lot of questions when it comes to discretionary trading. Is if I can't even walk away from my screen for more than a couple of seconds, I'm probably over levered in that position, right? Like I'm in a place where I'm going to get wiped out from this one trade. Not a good place to be in. And obviously trying to do that and build some level of consistency is sort of antithetical. You can be really consistent for 2 weeks and then over position yourself in one trade and wipe out all the progress that you've made. So I'm a big fan of automated trading just because the risk management part and position sizing is so consistent. And the idea here is consistency. I think that's really what he might focus on as well.
I really want to start looking at boxing and MMA more, because I want to get that really cemented in my head that doesn't matter if I dodge the last 9 punches. If I just let the 10th one go through, well, then my game's over. And what you just mentioned there, Micah, just reminded me, like, before I'd be lying down in bed at 2 o'clock in the morning next to my wife, hoping I don't wake her up as I'm sweating, thinking about my P&L on my account. Oh my God, what did I do? Should I cut the position or whatever? And as soon as I realize my position size is all I have to do, if I'm sweating, my position size is too big, just sell it and start again smaller. Then no problem at all.
What's the Mike Tyson quote? It's like everybody has a plan until you get punched in the face.
Exactly.
That's a good quote.
That looks great.
I kind of
All
wonder
right.
what Mike Tyson would have been like as a day trader.
Not good, I'm going to guess. I'm going to say not good.
You know who was surprisingly a good day trader that I did not see coming, but he's been interviewed. Anybody who's a trader who's curious should look this up on YouTube. But Josh Brolin apparently became a really good day trader in 2020.
Really?
Yeah, absolutely. So worth listening to his story. I think he's got some good nuggets of wisdom.
What's the pizza guy that does the pizza reviews? And he does other stuff, but he got into trading
Barstool
like
Sports
that too.
guy?
Yeah, the Barstool Sports guy.
Yeah.
Okay.
Apparently, but he was swinging for the fences on his trade.
He was,
Yeah.
and he was definitely, and maybe a little market manipulation here and there too with his.
I stopped watching him when he was taking Scrabble letters out of a bag and then buying those assets. I was like, I'm gonna spend my time doing something else. Thank you very much. All right, so we'll leave it there for this week. Thank you guys. Look at that, 120 people so far watching the show. Looks like Twitter's the place to be, folks. Twitter's the place to be. We'll be back next Tuesday for another office hours. Right, this Thursday for Blueprint. I think I'm going to be doing the geolocation AI strategy, automated, not strategy, but automated system that, depending on where I am, specifically, have I taken out the garbage? Have I gone to the store to do groceries or whatever? That it'll buy Bitcoin inside of my Kraken account.
Automated reward system based on your behavior, right?
Exactly.
I like it.
And then later on, it'll be like, depending if it hears me say nice things about my wife, then it'll also buy stuff. And I think my wife will really like that.
So you're gonna mic yourself all day long?
Oh, I am already mic'd all day long. I'm not sure if I brought this up. My mic is always listening to me constantly. It goes into a Dropbox folder, transcribed by AI, and I'm just waiting to like use that in order to get to. Okay, that sounded weird. I hear what I'm saying. It sounds weird. Okay, that's the future. We're all going to be there eventually, so I'm just there ahead of time.
Do you have the screen recording too? That remember you were telling me about, where it's always watching your screen?
Too much. I tried. Too many gigabytes.
Yeah.
too much.
But
Huh?
the audio is great.
Interesting.
My wife says, "You never said that." Oh, let me pull that up. I did last Tuesday.
I think there's a Black Mirror episode about that where everything's always being recorded and spouses are always like going back to check what was said.
To me, that was a dream. I don't know why it was like a nightmare scenario. I was like,
that's
this
a
is
note.
fantastic.
That's a hard note for me.
You can go ahead. We're going to journal and just watch with popcorn as you go through that experiment. Let us know how that goes.
Well, thank you guys for watching. I'll be back next Tuesday, Thursday for Blueprint, and Friday for After Hours. And until then, we wish you guys happy trading.
Cheers, everyone.